Welcome back to the channel. Today, we're diving deep into SoFi Technologies, NASDAQ. SoFi, one of the most talked about fintech stocks on the market. Is this a massive growth opportunity or a bubble waiting to burst? Stick around as we break down its financials, stock trends, analyst opinions, and key catalysts, and by the end, you'll have a clear picture of whether SoFi is worth your attention. Let's get into it. SoFi is currently trading at $16.18 per share, but the road here has been anything but smooth. 1. Over the past year, SoFi has jumped 27%, showing serious momentum. 2. But it's still below its 52-week high of $18.42, so is it running out of steam, or is a new breakout coming? 3. Just last year, SoFi was struggling below $10. 3. If you had bought back then, you'd be up over 60%. So, what's fueling this move? Let's talk fundamentals. SoFi's latest earnings report showed some serious growth. 1. Revenue. Up 19.3% YoY to $734 million. 2. Net income. A jaw-dropping increase from $24.6 million to $332 million. Yes, you heard that right. 3. EPS, earnings per share, beat expectations at 29 cents versus 27 cents expected, so things look solid, but what about key financial ratios? 1. P/E ratio, 43.6 high, but expected for a growth stock. 2. Return on equity, a mind-blowing 149% increase YoY. 3. Net profit margin, 8.4%. Showing SoFi is finally turning the corner toward profitability. 4. Debt-to-equity ratio, dropped 57% YoY, meaning they're managing debt much better. So far, big numbers, strong growth, but is Wall Street buying in? Looking at the charts, SoFi is at a critical point. 1. 20-day SMA, $16.50. 2. 50-day SMA, $15.80. 3. 200-day SMA, $14.20. SoFi is trading above all these levels, a bullish signal that buyers are still in control. But what about support and resistance levels? 1. Key support, $15.50. If it breaks below, we could see a pullback. 2. Major resistance, $17.50. If it breaks out, we could see a push toward new highs. So, which direction is more likely? That depends on big-picture catalysts. Here's what's been making waves lately. 1. Massive $2 billion loan deal. SoFi just locked in a huge funding deal with Fortress Investment Group, giving it even more firepower for lending. 2. Earnings beat but weak guidance. SoFi crushed Q4 earnings, but lower than expected 2025 guidance made investors nervous. 3. Fintech sector boom. With traditional banking struggling, fintech stocks like SoFi are getting more investor attention than ever. But here's the big question. How does SoFi compare to its competition? SoFi is battling it out with Affirm, AFRM, Lending Club, LC, and Upstart, UPST, but here's where it stands. 1. Projected revenue growth. SoFi is targeting 18.8% CAGR, outpacing most fintech competitors. 2. Profitability. Unlike some rivals, SoFi is finally profitable, giving it a serious advantage. So, Wall Street should be loving this, right? Not exactly. Here's where things get interesting. 1. Current analyst consensus. 1. Hold. 2. Average price target. 2. $12.18, which is 24% below the current price. 3. Bullish calls. 3. Needham is doubling down with a $20 price target. Translation? Analysts are split, and it all comes down to whether you believe in SoFi's long-term growth. Here's the deal. 1. Bull case. Strong growth, improving financials, and a booming fintech sector. 2. Bear case. High valuation, cautious analyst outlook, and soft 2025 guidance. SoFi could either blast past $20 or pull back toward $12, and which way it goes depends on execution. What do you think? Is SoFi a long-term winner or an overhyped risk? Drop your thoughts in the comments below. And remember, this is not financial advice. Always do your own research before investing. If you found this breakdown valuable, hit that like button, subscribe, and turn on notifications so you never miss an update on stocks like this. See you in the next one.